Okay, let's do an end of the market wrap video, stock market technical analysis. Going to go through general markets. We'll look at some individual trade ideas, kind of talk through what I think's going to happen over the next couple of days and probably this week. All right, so triple Qs, you can see we did rally. The video I put out previously, I said I looked like we were going to rally, and then I tried to get that out as quickly as possible, but the rally had kind of started. And we did rally pretty strongly. So if you look at the daily chart here on triple Qs, we rallied all the way off of this 334 area, so a pretty strong rally going all the way up that's about a 5-6% rally from the lows. Okay, where do we go to? Well, all right, a couple things. If I look at the hourly chart, probably can draw out maybe this downtrend like this, but that downtrend line's kind of been shot through. What I really think is we look at a rally up to either the 200-day, which is right there about 365, and then we have another resistance level about 361.06. So basically anywhere in there I think is probably where this rally should run out of steam. Now if you go to the daily, you can see we could rally up to the former breakdown level, which is about right there at 377. But I really don't think we're going to get that high, to be honest. I think we're probably going to stop at about that 369.56 would probably be my final rally point. So I'm going to be adding to my short positions as we rally. I just entered the day at the end of the day, took another short position, so I'm going to start building the short position over the next little while. So any kind of rally that we get all the way up to that level is where I'll be adding over the next couple of days. I think we're probably not going to do anything into the Fed, so we're probably going to just grind around, just chop. It's going to be a choppy market most likely over the next few days, and with probably a slight lean to the upside. So I think we'll probably just kind of flag out, basically, is what I'm thinking, is we're going to, start to grind higher slightly into the Fed. The Fed will come out. Again, I really do think, I really think the Fed is going to, talk about hiking rates, but then probably try to ease off on reducing their balance sheet or something like that, trying to talk a dovish game because they want to walk the markets down. They don't want the markets to crash. So they've already seen, we've already seen from the highs in Qs down to the lows, 18%. All right. Any more downside from here, we're entering into official bear market territory. So if the Fed wants to keep that from happening while being able to raise rates, they'll want to try to come out dovish, all right, for the markets. Looking at the SPY here, the SPY, here's your 200-day. I've got it kind of a line drawn, but basically up to 442.08. So I think maybe a little more upside there on the SPY, probably into the Fed meeting. And then after the Fed, we'll have to see. The day of the Fed announcement, things can get really whippy, but I think there will be selling after that announcement, whether it's right after or, maybe the next day. That's where I think the selling will start to show up again. Again, if you look at the weekly chart on the triple Q, or sorry, not triple Q, it's the SPY, going off the 2008, 2009 Great Recession lows, this red trend line marks our bull trend. All right, on the weekly, I've got all the tags of support marked, and we held support right in there too. We broke, the Fed pumped it, COVID hit, the Fed pumped it, and you can see we're back below it, and we're below the 200-day. So it's not a bullish setup longer term. We're, as far as I can tell, we're starting a bear market, and it is a sell the rip market. So as we rally into resistance, that's where we look to reshort the market. It's different than really all of 21 because each dip, we only dip right to this trend line and then they bought it. Here's a dip, they bought it. Now we've broken that. We've broken that we're below the 200-day moving average. We really haven't been below the 200-day moving average since, here's a break of the 200 back in the COVID drop and then just a brief little break right here. So we haven't been below the 200 since then, and We're clearly below it now, so I'm looking for more downside in the near future. IWM, small caps. I like this one just because the chart's so clean. If I look at the daily chart here, so the resistance, the major resistance level is really right up here, 208.75. Sorry, it's about 209. So we could rally all the way up to that 209. Any move up and getting close into that area is where I'd look to reshort this. I don't. They'll probably step in early and sell it down before you actually get there because it's such an obvious level. Again, that level is over just a big year-long sideways trading range, and we broke to the downside. So rally should be sold on this one until proven otherwise. So any kind of rally up into 204, about 205, all the way up to 209 is the area where I'd be looking to reshort. And I actually started reestablished another short position today after I covered those short trades recently. Okay, so that's the key levels on kind of the major indices. Financials are above the 200 days, so we did have a whip below it intraday, but they closed the day back above it. So fairly bullish. That's some bullish price action for sure on the daily chart. So that tells me, that's why I think that we're likely to, we might rally a little bit more into the Fed meeting. Financials have big resistance right up here, about 38.90. Okay, so I think we'll probably, if anything, we'll maybe rally up to that 38.90, and that's where we'd likely get rejected for a move lower. Gold, was up a little bit today, but not a whole lot. And, likely gold's going to just chop around into the Fed. We're probably going to just chop around. And then when the Fed comes out, that's when we'll likely see a breakout or a breakdown. The charts tell me we're likely going to break out. We've had this big sideways range. But again, if you roll back, you just look at the bigger picture. We've been in a downtrend for a while. Down towards the bottom of this downtrend, we started to put in bullish divergence on the daily. And you can see the momentum has just really continued to the upside, trending higher, while price has kind of consolidated and just moved sideways. So I think price eventually catches up with momentum and starts to move to the upside as well. Possible short trade idea today, LPX. So LPX, you can see we have a upward trend line on the daily chart. And this is where it started. It's really just been walking, moving higher with the 200-day moving average support. Now we broke right recently. There's a sell signal right down to the 200. Today we were below it, but they bounced it right back up, right into resistance. So I think we'll get rejected here, right at this level of about 67. Probably trade back down to the 200, and then ultimately break the 200 to the downside and start to head lower. We've got some support right here at about right there at 40, let's call it $50. That's pretty good support. So I think that's probably a near-term target. And from where we're at now, that would be a move of about 25%. So I like that for a trade idea. This also up here at the recent highs, we had negative divergence right there. See how the momentum is moving lower, and yet price was making new highs. So there's your negative divergence. Sell down, break a trend line, back test, and I think we start to roll over now. So I like that as a short idea. I did short this one today. I'll probably add to it if it continues to work. And here's Gamestop. You can see just continuing lower. Even though it was down a lot lower today and the buyers did come in, they still had a lower close. So we're just continuing to follow the slope of hope. All right, down 5, almost 6% today, even with the even with the rally, intraday rally. So this one, I don't see much strength in this. This is a retail trade, and retail is scared, all right, because of the move that just happened. A lot of their other positions, a lot of the momentum stocks have really completely unwound, and so I don't think they're emboldened right now, and so likely we're just going to continue lower. And this one should continue to sell off. So I'm still short this, still like GME to the downside. And the gold miners, decent reversal today in the gold miners. You can see today we sold off. We were way down here at 30.44, but the buyers stepped in and brought it back above this major pivot line of about 31.34 and closing above there, right there. So that 31.34 area, if I roll out, you can see that's major resistance. Back, for about 6 or so years, we've traded right to that, and it's got rejected. They stepped in a little early there. It was rejected again. And then when we broke above that line, as I zoom in, support, and support. Little bit of a brief undercut here, but they rallied it back up. And it's just gotten kind of choppy recently. We've just kind of chopped through it. So I don't make a whole lot of the recovery today because of the recent chop, but it is a major pivot line, and I think there are buyers here. To me, this looks like accumulation pattern where, we're breaking below, but the buyers are there to bring it right back up, and we're above there now. So again, I still think this is probably one of the most bullish looking sectors, the gold miners. And I think they're likely to start rallying for, the next leg higher, which could turn to be a pretty good sized move. We might see these things rally from, your flagpole. You could maybe measure it like that and then do something like that. But yeah, I think these things are going to break above the all-time highs on the next leg higher and make new highs. So miners look good still. They're just taking some time. They're taking their sweet time. We're just kind of waiting. They're not moving. They're not going up yet, but they're also not moving down. And Eli Lilly LLY, you can see we dipped below the 200-day, recovered it, and held at that first level of support right there at about 239.90. So again, we need to see that break, and we're probably going to get a little bounce, and then it'll break here in the near future. I still think this is going lower. We'll probably bounce here just slightly though. Keep an eye on this one, GPL. This is a penny stock. I don't cover these a lot, but I see something here in the charts. Again, you always want to adjust your position sizing based on the volatility. Penny stocks, you want to scale it way down. So let's say you normally take $10,000 on a trade. This you might want to take 1,000. Just something you want to scale it down because you don't need a lot in order to be successful in these. When these rip, they can explode, quite a bit. And again, everything I teach on this channel is just my opinion. It's not actual financial advice. So it's just what I do. GPL, you have bullish momentum, so bullish divergence on the RSI and the PPO. You have downward price action, and we've got a trend line to watch. So we don't have a buy signal yet, but we get a bullish breakout above this trend line here. That's our buy signal, and it'll probably be a pretty quick move, probably a one-day move directly up to gap fill at 36 cents. I am anticipating that when we get that buy signal, it will be a straight shot right to that 36 cents thing. We'll probably get a pullback there. And then, for me, I think the trade's probably just up to that 36 cents move. Let's say we get the break, it's still a potential 50% gain maybe in a day. So this very speculative kind of day trading chart, but I did want to point it out in case anyone's interested in keeping an eye on it. By the time I can actually show this to you guys in a video, if we do get a buy signal, the trade will most likely be played out. So I just want to point it out in advance so you can keep it on your radar. Okay, and to wrap up, keep an eye on Apple. So Apple, I'm watching this blue trend line right here coming off September 2020 timeframe. You can see resistance, resistance, resistance. It was resistance right here as well. And then we broke out, but this is a bearish rising wedge pattern. And, usually on those, you want to look for a break to the downside. So it broke to the upside. It's now failed. We're back within the wedge. That tells me there's a very high probability we head to the bottom of the wedge down here. So what I'd expect is maybe over the next few days into the Fed, we rally up to that resistance line, 165, right around 165. And that's probably as far as it's going to go. And then we'll get rejected right there and work our way down to the bottom of the bearish rising wedge pattern. All right, so just something to watch if you're looking for levels to, maybe establish a short, or if you're looking for a place to add to your short. This is just another chart to watch that helps you really helps you understand, okay, this might be a good spot to short. If Apple gets up here, we'll kind of see where the Qs is at, and it most likely will be right at resistance as well. So that's all I got for today, guys, and I'll catch you guys on the next one. Bye.